Hello dear traders and partners of AMarkets. My name is Daria, I'm the financial advisor, and today we are going to discuss the situation in the global financial markets. So let's get started. The Great Britain pound rose against the US dollar on Thursday. As for the US macroeconomic figures, we saw a decline in weekly initial jobless claims, a small upward revision of first quarter productivity, and a smaller than expected gain in ADP private payrolls. This data comes ahead of today's non-farm payrolls, where, according to market expectations, employment is likely to keep improving in May, but at a more moderate pace. This can lead to a drop in the unemployment rate to a post-COVID low. There was no UK data on Thursday's schedule, and markets were closed for both Thursday and Friday for the Queen's Jubilee. A further rate increase is expected at the Bank of England's next monetary policy meeting, in almost 2 weeks. The pair can correct to 1.2550, and after that the price will probably continue its upward movement towards 1.2625. Next, USDJPY, and the US dollar fell against the Japanese yen on Thursday due to a decline in the treasury yields and the risk-on mood. The weaker yen was initially welcomed by Bank of Japan officials because it benefited Japanese company profits and resulted in more competitive exports. The latest CPI print underscores the issue of rising prices, which are hitting households' disposable income. The bank understands that the majority of price increases are attributed to surging commodity prices and not a result of an overheating economy. When viewed without elevated fuel and food costs, inflation in Japan was around 0.8% for April. In view of the fact that the Fed is going to raise interest rates in the middle of the month and the Bank of Japan does not plan to do so, this could put additional pressure on the yen in the nearest future. Last, S&P 500 and US indices closed sharply higher on Thursday, led by Tesla, Nvidia and other mega-cap growth stocks in yesterday's session ahead of today's key jobs report. Of the 11 S&P 500 sector indices, 10 rose. US stocks recovered from a drop early in the day after a Federal Reserve official said that the backs at least a couple more half percentage point interest rate hikes and sees little case for pausing rate hikes in September if price pressures fade to cool. The US stocks market has shown a modest recovery in recent sessions, and investors assume that the worst of a sell-off that has dominated Wall Street in 2022 may be over. Stocks are highly dependent on inflation, and until inflation gets under control, volatility is likely to remain high. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention, subscribe to our channel, and we will do our best for you to reach success trading with AMarkets.